Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the 6 p.m. start of week session in the Forex trading room for March 8th of 2020. We will be going through our standard results from the strength meter for the last week and the last month. Fundamental announcements scheduled for this week. A look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. For a couple of trades on Friday late afternoon, right before market close, and already and the USDJPY gap by about 100 pips on the open. So we're carrying 100 pips profit on that one trade. And euro dollar has also risen significantly. So we're carrying profit on that one as well. So it looks like the fears from the coronavirus and other global events right now are going to be continuing into this week, at least if we go by the market open. So the full balance of the account, but we do have two trades now open at profit. The intermediate term ledger had an up week. We closed a profit of, I think, close to 3% on the movement from last week. And right now we have the trades you see open there on the screen. The red rectangle indicates the trades that were open last week. Our most significant winner was the USD Swiss, where we picked up close to 300 pips. We did have one significant loser with the Euro CAD. It took us out at the stop loss. Everything else was positive. Well, no, Aussie CAD was negative, but a small amount, and the other ones were positive by small amounts as well. So not a huge jump in the balance, but still we're up 2 or 3 percentage points from where we were last week. And the trades that we have open that were closing, or rather the market closed, they were carrying losses on Friday afternoon, are almost all of them carrying profit right now, in some cases significant profit. We also entered a couple of trades very late in the day, almost actually, Euro Swiss was a trigger trade that was earlier in the day, but USDJPY we also entered very late in the day, and again the USDJPY gap by about 100 pips at the open, so we're up on that trade as well. And on to less better news, on the short-term account, we did carry a loss last week. Oops, I think I clicked twice here. Sorry about that. Going back. So we did take a drawdown. It was a very sideways week with a very bouncy market. We're still up on this account for the year, but not as much as we were before. So again, we'll be taking our normal system trades this week. We do expect there to be weeks where this account has a drawdown simply because of the nature of short-term trading. So nothing out of the ordinary. Notes and opportunities for improvement. As I mentioned, it was very volatile and mostly sideways week, but it did have some really wild bounces within the week itself, which again is not conducive to short-term trading. And we did have some very steep retracements Friday afternoon, early afternoon into late in the day towards closed market. Drawdown on the short term, as I mentioned, as is par for the course on bouncy weeks. Gain on the intermediate, and the couple of long-term trades that we did open. The coronavirus is still sending shock waves through the market, so that continues being the primary factor in all of trading. The stock markets are having a roller coaster. The Forex, the different currencies are going in different directions. Safe haven currencies are gaining strength. The rest of them are losing. So volatility remains quite high. And of course, that is when we can take a lot of advantage out of the market. Volatility is a trader's best friend as long as they know what they're doing. And as a reminder, I keep mentioning it in every one of these sessions. We do have our live event happening at the end of April in a little bit more than a month in Wilkes-Barre, PA. Details are on the website as well as in multiple emails we have been sending out. Our relative strength meter for the last 30 days and the last week. Looking at the 30-day view, the volatility remains significantly high. It's still above 8%, same as it was last week. We have gold outperforming for the month and silver doing the opposite. So silver has actually been losing ground for the month, though last week it did regain some ground. Aussie, let's start at the beginning with the Aussie is significantly losing ground. The CAD was a clear loser as well. The Swiss, again, a safe haven currency, it did quite well. The euro also made some recovery. The pound was sort of middle of the pack. Yen, another safe haven currency, significantly up. Kiwi dollar down, and US dollar neither here nor there. It gained ground against some, lost against others. For the week, Aussie middle of the pack. The Canadian was a clear loser, especially after their interest rate decision last week. The Swiss gaining ground, euro gaining ground, pound sort of middle of the pack. The yen gained ground, Kiwi collapse. Dollar is the significant loser other than the CAD for the week. So we did have the dollar giving up a lot of its gains from the last few weeks or even months. And we do expect the dollar to continue into weakness given all the uncertainty in the markets right now. And again, silver and gold had pretty good weeks, which is what you would expect. The more uncertainty in the market, the more people will start moving their funds into safer instruments. And bullion is, of course, traditionally been one of the safest. Fundamental announcements for the week, a pretty light calendar. Well, I shouldn't say that. We do have multiple high impact announcements, but they're around GDP and CPIs, and I normally do not trade these, and this week will not be the exception. We do have an interest rate coming out of the European Central Bank on Thursday, so we will be trading that live in the morning. Probably opening up the trading room around 8:30. And then we have an hour later the monetary policy statement and press conference out of the ECB as well. So we will be trading both of these events. That's the only fundamental trading we'll have for the week. Moving on to our charts, oil completely collapsed. We see that long candle on Friday. I'm very eager to see how the week is going to be opening, but oil has lost its floor. Before the last couple of weeks, it never traded below 50.50, and from 2 weeks on, it has dropped almost $10 from that previous floor. So it's in free fall right now. There's no telling which way the market is going to jump, especially given everything that I mentioned already regarding coronavirus and logistics issues with production. It looks like oil is in for a bumpy ride. It will at some point recover. Things always do recover. So this is probably going to give us a good opportunity to trade back up, especially with the Canadian, which is obviously suffering from the collapsing oil prices. So once the recovery in oil starts, we should have some really good opportunities to trade the CAD into strength. For now, it's in an observation market. Euro dollar, as mentioned, the euro was one of the big winners last week. It had regained a significant amount of lost territory from the past couple of months. It went all the way to the top of the daily chart, broke through almost the topmost level of resistance before suffering from that Friday retrace I was mentioning. And as the week opens, the euro dollar is heading back up. We are carrying profit on one trade that we opened late in the week to take advantage of this retracement. So that's been working out pretty well. It is at a crossroads, so we have to be very careful with the euro dollar. If it does continue breaking above resistance, we will start piling in more funds into long euro trades. But I am really waiting to see how this week kicks off. Pound dollar was reasonably flat. The dollar collapsed, so that's given. So we see the pound dollar heading up, but it wasn't as sharp a movement as we just saw in the euro dollar. It barely went up to the prior level of support resistance at the 130. So that was about a 200 pip movement throughout the week. It looks big, but it really wasn't considering everything that the pound has been doing. So the pound didn't have a great week either. Otherwise, this chart would be showing a price much higher than where it is right now. So again, bears watching, but I'm not ready to jump into a trade on the pound pairs just yet, other than the euro pound that we already have open in one of the intermediate accounts. USD JPY, as mentioned, the yen was a clear winner for the week, and the dollar was a clear loser. That made this chart jump all the way to the bottom. We didn't catch most of this movement. I was a little bit uncertain with the yen at the beginning of the week, and then after that, it was a little bit too late. But once it did break the bottom, we did enter on Friday, as I mentioned, and we're now 100 pips up. So this has broken the bottom. Obviously, this chart is no longer up to date since the market opened, but the new price is well below the prior floor we had at the 104.50, and well, we'll see where the week continues. For now, it is breaking support at the bottom of this chart. USD Canadian hasn't been able to catch a break, so it is still trending very near the top of the chart. Probably a good short opportunity unless it does break that new ceiling. So we'll have to see which way the week starts trending. But this is looking like a very good opportunity to trade it back down on continuing dollar weakness, and if everything works out on the CAD starting to regain some strength. There's just a huge gap that needs to be filled on this chart if and when it goes back to the bottom of its prior sideways channel. USD Swiss, another of those very big movers for the week, and we did catch a lot of this movement, and we're probably going to be catching more of it. So it has broken all support and is now probably has another 200 pips to go before it hits the weekly level of support. And from then on, it could very well keep going to lows not seen in a few years. Aussie dollar is, this is a very odd chart because we have the dollar weakening, and you can see that happening in this chart, but at the same time, the latter half of the week ended up pretty sideways, and this is because the Aussie is also suffering right now. So we have two weak currencies or weakening currencies fighting it out against each other. So one of them will end up winning. Usually happens, even though it might go sideways for an extended period before that. But we will be looking for breakouts to trade it in either direction. Kiwi dollar, pretty much the same thing, though not as drastic. We did have it going in general up, but not a huge amount. There's about 175 pips between the bottom level of support and the level of resistance it hit on Friday before retracing. So not a huge amount of pips, but again, we're waiting for either a bounce back down or a breakout from resistance, after which we will start trading it up. I think we have one trade open on this one in the right direction. We'll have to wait and see how it continues before making any further decisions. But it is starting to look good for a breakout towards the top, especially if the dollar continues losing ground. Aussie Canadian also retraced up a couple of levels of resistance, hitting the bottom of the Ichimoku cloud before retracing on Friday. Another one where I think we'll have more opportunities for a short than for a long, but we will be waiting to see which direction the week takes. Euro Swiss, and we entered this one late, early afternoon on Friday on a pending order. So we are carrying some profit on this trade. The Swiss, of course, being a safe haven currency, and again, it has broken bottom, which is significantly bearish, but we'll have to see how the week begins. Euro pound, we're in long. We took profit last week. After that, a little bit of a retracement towards the middle of the week, and then we re-entered long. We ended up the week carrying a negative balance on this trade, and as the week begins, we're positive again. So as I said, the week has gapped at the beginning of the market open, has gapped on multiple currency pairs, and that is a pretty good indication that we're in for a continuation of the prior trends as well as coronavirus fears. Euro JPY, very bouncy, and you can get a better idea of why I was resisting the idea of entering the yen pairs. They were just going in both directions, and in this case, it was 200 pips up and then 200 pips down. It looks like the direction is now going to be down, and I think I have one trade open on this pair, trading it towards the bottom. I forget, but if I don't have one, we probably will have one soon. It looks just primed for a breakout towards the bottom of the chart. Euro Canadian, another example of how the CAD has completely collapsed, plus that euro recovery from last week. Another one I'm keeping a close eye on for the open, what it does in the first 24 hours of the market this week, to see whether we're going to have an opportunity to trade it back down to the prior channel, or indeed if we're in for a long-term breakout. Pound JPY, very sideways, which is odd because the yen was staging quite a bit of a recovery and the pound wasn't really gaining strength, but it really didn't move much this past week. Might give us some opportunities. We'll have to keep an eye on it, but I didn't really like the look of it too much. Aussie JPY, again, a yen pair went in both directions with a vengeance, 100 plus pips, 150 pips at a go in both directions. But I do think we're going to have opportunities to trade a breakout at the bottom of the chart. So we will be waiting for that opportunity as the week starts. Euro New Zealand, another one that really didn't do much over the week. It's got about 175 pips of range in that sideways channel, but you can see it went in both directions. So nothing I would have liked to trade. We stayed out of it. And another one we're waiting for a breakout in either direction in order to jump in. I would really love to trade this one back down, but I don't think we're going to have that opportunity anytime soon. The euro is gaining strength, as we've mentioned a couple of times, and the Kiwi isn't doing that well. So the likelihood of a breakout towards the top are a little bit higher than a turnaround and a trip towards the bottom. So again, observing it before we jump in. Pound Canadian lost ground last week. You can see that happening here as well. It did break above the trend line, ending the week pretty close to that high. It only retraced a little bit. So we'll have to see. I'm not in any rush to get into this pair. But if we do see a good opportunity, well, we will take it. And last but not least, Pound Swiss, which had a significant drop on Friday before retracing back to the midpoint. I think we have a trade open on this one as well on the intermediate. It is carrying some profit as the week begins. And even though it did move down, it was more sideways than anything else. And we're still waiting for it to break the next level of support at the 120.75 or thereabouts. So, and even that is more than 100 pips away, 150 pips away at this point. So we'll have to wait and see what it does. That is the end of the charts. Obviously, coronavirus, I've said it a couple of times already, is going to be the focus of the market for the foreseeable future. It's just the biggest thing that has happened in quite a while, probably bigger than Brexit at this point, just based on the impact it's having on multiple currencies. Brexit was pretty much limited to the pound and the euro. So here we're seeing that everything is reacting around the coronavirus, and which is why I changed the picture here on this slide. That is a picture, I guess, idealized of what the virus looks like. So setups we see in progress, of course, multiple currencies, currency pairs are starting to trend. We will, that is our standard, we will be following the trends as much as possible, but always taking into account that the coronavirus is going to be the big key factor in much of the market movements that are going to be coming up. That's it for this week. My parting words here, and this is based on something that happened this week, but the message is successful traders don't need to be right. What we need to be is profitable. It doesn't matter if you're right. It doesn't matter if you guessed the direction of a pair, and that is what it is: educated guessing. There is no predicting. But this week, one of our trial subscribers, whose trial had expired recently, told me that they'd taken a big loss on the USD Swiss this past week. And I replied, and I wondered how that was possible when we cleared almost 300 pips of profit on that pair. Then I remembered that at the beginning of the week, or maybe the end of last week, we had actually been long on the USD Swiss. At some point, it broke support and we reversed the position. We got out of the long, we went in short, and we took those 300 pips. So this is a classic example of why trading is considered active income, because you have to actively manage what you're doing in trading. It's not like a set and forget or a buy and hold where you just go in one direction and you can come back and check in 5 years and see how you did. You have to actively manage your trades. So when I was long on the USD Swiss, I was obviously wrong, and I don't mind being wrong. It's not about being right or wrong. It's about making money. As soon as it was clear that I was wrong, I went in the opposite direction, and we cleared a nice chunk of change out of that trade. And I think so did all of you who are subscribed to anything, the Signals, the Copy Trader, the Trading Room. So the parting message is, you don't need to be right, you need to be profitable. And of course, if they had paid for the subscription instead of letting their trial expiring, they would have made the same money as everybody else did. And the slide I've been adding a little bit of a change this week, and that's just to say, after all of your suggestions, and I do appreciate it, I definitely refuse to advertise the way most other Forex academies and schools and, sorry, scammers advertise, because I don't want to compete with them. They're promising 100% a week returns, which we know is bullshit, pardon my French. And I'm not going to compete with that, because if I start advertising, I will start sounding exactly like them. A couple of you have suggested that we use word of mouth to get the message out, and I like that. I am not the one. I can't go out there and tell people how good I am. For one, I'm much too humble for that. You all know that. But on the other hand, I'm going to sound exactly like the idiot scammers. So you guys, you're the ones making money from my signals, from my copy trading, from this and that. Tell your friends, tell your family, show them your accounts, tell them that it is working out. Go for it. And anyone who signs up through you, I'm going to be giving you discounts on your next renewal. And if there's a lot of them, heck, your renewal is going to be free. So just let me know when you're going to be sending someone our way, and I'll make note of that. And I promise I will show my gratitude very effectively when the time comes. So email me with any further suggestions, or with anybody you're sending my way, to my usual email. And I hope to hear from you guys soon. Final, I guess, message for the week. We did change our time here in the US. So we're now on daylight savings time. The clock jumped ahead 1 hour. So those of you outside the US, make sure you adjust accordingly if your clock didn't change, because we will be having our sessions at what is nominally the same time, 2 p.m., 8 p.m., but that time might not be the same in your country. So make sure you check and make sure what time these sessions are going to be happening. Any comments or questions from anyone? Okay, thank you very much. And we will be back tomorrow for our 8 p.m. session. Have a good one. Have the rest of a great weekend.